Chinese Premier Li Qiang has expressed concern over protectionism and called on the international community to unite in safeguarding free trade. At the World Economic Forum, he expressed concern that protectionist measures are significantly increasing, attributing this rise partly to intensified global trade friction, especially referencing the Trump administration's tariffs. Li noted that there are also proactive forces that seek common understanding and strengthen collaboration to confront these unstable and uncertain risks. The Reserve Bank of India has reported that India's economy remains resilient despite global uncertainties stemming from trade and geopolitical tensions. The bank recently cut its key policy rate by 50 basis points, allowing it to focus on supporting growth as low inflation continues. Retail inflation slowed to 2.82% in May, remaining below the target for the fourth consecutive month. High-frequency indicators for May show robust activity across industrial and services sectors, with agricultural production also increasing. It noted that future prospects will largely depend on July's trade policy outcomes and evolving geopolitical events. In Australia, Australian consumer price inflation slowed more than expected in May, with a key core measure hitting a 3.5-year low. This has significantly increased expectations for an imminent interest rate cut by the Reserve Bank of Australia. Data released showed the monthly consumer price inflation rose 2.1% in May year-on-year. Critically, core inflation slowed to 2.4% annually, falling below the bank's 2 to 3% target band. Financial markets now price in a 92% chance of a quarter-point rate cut by the bank on July 8th. Moving on to Africa, Ghana's parliament has approved a $2.8 billion debt restructuring deal with 25 creditor nations, including China and France. This critical agreement is set to unlock further International Monetary Fund bailout funds and help address the country's severe economic crisis, which led to a default in December 2022. The deal reschedules payments due through the end of 2026, delaying them by over 15 years to begin from 2039, and includes favorable interest rates. The West African nation, a major cocoa producer, is now negotiating with commercial creditors to finalize its overall debt restructuring. Sales of new U.S. single-family homes fell sharply in May, dropping 13.7% to an annualized rate of 623,000 units. The Commerce Department has reported that high mortgage rates, hovering near 7%, largely sapped demand. This decline boosted the inventory of unsold homes to 507,000 units, its highest level since late 2007. The housing market continues to face headwinds as the Federal Reserve remains cautious on interest rate cuts, with Chair Jerome Powell noting tariffs could push up inflation. Builder sentiment has also plummeted, reflecting the challenging environment. JP Morgan analysts have warned that U.S. trade policies are likely to slow global economic growth and reignite inflation in the United States, with a 40% probability of a recession in the second half of this year. The bank slashed its U.S. growth forecasts for 2025 to 1.3%, citing a stagflationary impulse from higher tariffs. JP Morgan expects the Federal Reserve to cut interest rates later than market consensus, starting between December 2025 and spring 2026. Despite the macroeconomic concerns, the bank remains bullish on U.S. stocks.